Welcome to TradeTheNBI.com. This is Jonas Reporters for the first, and well, we've gotten that little bit of softness. We've been in this range right here. We did see the steel buyers now starting to move over in that little decline. So we got the ABM values right here, and that we should get a play up against all of those. But let me try and get the number up there for you. You can see what the values. We got the 2093, 2193 for the yellow, 2188, 92, and 80. So you can see it's all pretty close right in there as we're just about even on the shakeout and oversold, ready for a move. But you need to see the orange come all the way down below to give us a reset would be nice. Even a midterm buyers crossing above red right here would give us a little bit more impetus than we're seeing at this point. Shakeout, not shakeout, but the extreme histogram here, not oversold in that sense, but right in the middle of the road. Not bad. It's a good point for a reversal pickup. I mean, you can see last time we had a series like this at the end, it's a buildup. So keep that one in mind. NASDAQ suffering a little bit more than the others, and that's fine. It's right in the middle of the ABM values. Right there, not a surprise we saw that. Now the Dow has been overextended from this move, but still clearly cyan under red. That's still more bullish than not. Positive extremes fine. Could have some retraces in there, but those become opportunities to buy at this point, not sell. You can see the euro's catching support right around the 105.4 range, right in here. Basing off that, had a nice little move down for their new buy signal that took place right in there from a daily. The shakeout, though, still unable to get to the zero, and this becomes problematic here if it dips back below it. It's going to continue to have issues. We're looking at it from a put the 5K chart up here. It keeps coming up and retracing those, and it keeps going right around this same base level. It looks like where central banks seem to want to jump into it. Now you got the referendum in Italy coming up here. It's a big deal. No looks to win pretty easily. I mean, even in hometown of Renzi here in Florence, had a huge no rally. That's a kind of indication. It's like when your own leader's hometown is railing against the very thing that he wants, doesn't bode well for him going forward. So he's got some issues with that, and that could have some more problematic issues for the euro in general, which impacts the U.S. in the sense that S&P 500 stocks, big influence here, and a devaluation of the euro hurts earnings. So not to mention making U.S. goods less competitive, so you get double whammy. Now I put in here the 123 as the turnaround point. We got a little more weakness in bonds. We'll come down to where the ABM red short level stop is. Those would be your turnaround points. Minus 30. I mean, that is like super distribution. No surprise though. Now the pop faking oil. Yeah, it's already overbought. It's going to retrace this move as it is, so that's going to bring it back down to the 67 era. Even an attempt at reductions in supply aren't going to really materialize when it's only going to cause U.S. ramp up. So it's a real sad situation for OPEC going forward as far as their ability to control things, and you're going to see that reflected. I mean, right now it's a paradigm shift. It's like you're looking at the old models. And it's the same thing with the U.S. market. You're having to identify things that are relatively quantitatively unknown and make some assessments, and it's becoming very difficult for some of these people to process that the way things had been done in the past is not going to work. Likewise for gold. I mean, this has been gold is a perfect lesson of it. Everyone assumed inflation would take place given the quantitative easing, but they misread the multiple components of adding in cheap labor and lower oil prices. It was just a miss because this is where people get too selective on a given field, and they forget the broader social implications of trading. Trading is a social, economic combination. It is not exclusive to one or the other, and perception is king. And if you can't quantitatively assess perception in your algorithms and that, then you miss a huge component. So we had the lovely short going through. We had a decent buy came in through here, but it happened right at the same time you ended up with a DOC spread. So you can't have a DOC spread and a buy signal all at the same time. It was not effective right here when we had the dip below, because we had, if you look right here, and this is a good point to show. This is what some of the conditions we're talking about. You're overbought right here, got overbought. Right at the same time, the signal took place on the DOC here, and what we look for was the orange below the red, and then the steel coming below 7.5. So those all took place right at the same time, except for overbought on the extreme. Not going to happen. And then boom, as soon as you move to what the signal would be after that, it's DOC spread taking place right there. And then of course we ended up with the orange moving right into the weak zone. And that continued. Now we just did get one that dipped down below here, but you can see we didn't get any support from the steel as far as dipping down. So we just had one right about now, but again, he got overbought on the first one, and so then finally right here when it came down, right down at 98, and so we're right at where that buy signal is. So interesting. Still general positive viewpoint going forward here. I think people are waiting for some serious appointment decisions in that, and trying to weigh in what's going to happen with this euro situation. It's kind of putting a pause button on things until people can get a clarity. The French election situation, and there's some political turmoil. I wouldn't necessarily say that the financial situation is all that much different than it had been. There were always these trouble signs, and yet there's nowhere else to put your resources. That's the ultimate bottom line. The China element is a whole nother one we haven't talked about, in the dollar liquidity issues with China and their inability to handle some of the tightening that's taking place there is also going to have, and the thing is like one component or another is not necessarily enough, but when you start having them come in sequence together, that's when warning bells start to ring. So, do I say have long-term puts purchased that are in the money and out in time? Absolutely. Can't hurt to have that protection, and then trade inside of having that ability, knowing that still we have some degrees of long bias, given the potentials of what can happen for economic stimulus. 50 days away from the inauguration, and it's going to be really exciting to see how all that takes place. There's always excitement with the new administration, what's going to happen, how things play out. This is going to be definitely tilted towards business growth. I don't see how you can look at it any other way, and I think that we're definitely going to be looking at 2350 easy on the S&P. You're going to move well into the 20,000 Dow. So just throwing those things out there for you. As always, though, trade well. We'll talk again later. And indicators have been sent out, so everyone has them, and I should be starting to get to some of those just for adjustments here, showing that this would have flipped back to a red. Well, it would have never turned green. It turned green simply because the cyan moved below red, and then automatically flips it at that particular point. But with the alternative understanding of overbought, positive extreme in that from the buy signal, would not have. It would have just flipped back. You would have ended up with a net zero long, and then it would have turned to short signal as long as that was staying in here until we ended up with this dip down here. So it would have been a decent short viewpoint. As always, though, trade well. Talk again later.